Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Hey, Kirill, welcome to the show.
Hey, awesome to be here. Thanks for having me.
Man, I'm excited. Today should be a great interview. I can't wait to hear everything that you've done, or at least if you can give us some high-level versions of everything you've done. As the show typically flows, things we want to know is, where'd you start? Where are you now? And how'd you get there?
Cool. Yeah, I'll try to sum it up as short as I can. So I'm an immigrant. I came to the U.S. when I was 11 years old with my parents from back then. It was USSR. Now it's Belarus, a separate country going through some turmoil right now, actually, over there. But nevertheless, I came as a kid, had some relatives in the U.S. and in Connecticut, settled in Connecticut. And, I sort of was always entrepreneurial. My uncle was my mentor. He started some businesses, and he was about 10 years older than me. So I always thought about, doing things for myself. And U.S. obviously is the best place in the world to do that. So I was always interested in doing that. And, I kind of went into technology, technologies, various technologies. And I studied computer science in school. I was always interested in tech. And so I started a couple companies. My first, started dabbling, like my first company was the web hosting company while still in college. I started a more serious company after school called computersport.com. They've since renamed. They're now called Stratus Point IT, but it's essentially a managed IT services company. It's, essentially support cloud services, things like that for small, medium, and large businesses. I think we did pretty well. We sold the company in 2017, and then we actually started a company that kind of spun out of this called Unigma, which was a software for cloud management. So, I was kind of a technology. I still am a technologist. I consider myself tech first. Learned about real estate investing. I think about 2013 or so. A friend of mine was doing fix and flip, and I invested a little bit of money with them, and that's kind of how I learned about it, and really loved it. I mean, I think real estate. I love it from a tech perspective because it's got so much data. I mean, transactions that are publicly available. There's so many things going on, right? So for a technologist, there's a lot to get our hands into. And then just from sort of a business and marketing perspective, I thought it was very interesting. Long story short, myself and my partner Alex started New Silver, which is sort of a fintech lender in the fix and flip space in 2018. Went to market 2019. We essentially continue to build software, originating loans. Our vision was to make the loan origination process faster, easier, and sort of de-risk it for the lender. And so, that's kind of the goal of our software. We pulled a lot of different data sets together, and ideally, we try to make the process as fast as possible. So what we've done already is for the borrower who wants to get a loan, they could come to our website and basically get a decision in under 10 minutes using our proprietary underwriting process.
That's fantastic. I mean, because so much of the time is spent, monkeying around with can you underwrite this? Can we get approved for this? Is this something is this a deal you guys will do? I mean, that takes a long time. Are you guys are working in the residential and commercial space, or is it simply on a residential space?
Primarily residential. We've done, a few small balance commercial deals. I think the value of the data and the process that we built, on the residential side is just a little bit easier to build this automated underwriting.
Sure.
On a serious commercial scale, it is harder because everything is fairly custom, right? So it would be harder to build an algorithm that will kind of give you answers quickly, though I think people are trying to do it, and it'll probably get done at some point. But that's not our sweet spot. Though we've done some deals there.
Right, and the difference obviously in residential and commercial is that commercial is typically underwritten based on NOI. So that's you can't necessarily. You can take a residential property and figure out its value pretty quick based on comps, but I would think
correct. Yeah. So we look at comps. We also look at a lot of sort of the census data, just neighborhood data, right? Like how long properties stay on the market. For commercial, I think it would be much harder because to find a comp is already difficult enough, right? And then how much does it look like your property exactly? It is harder. So I think technology, I mean, a lot of people are trying to attack the commercial space from a technology perspective. And, I've seen very interesting companies trying to do, cool things with tech.
Right. That is it's a fascinating. You bring a fascinating perspective to the table. I'm curious. One, you wrote a book. I don't want to forget to talk about that. So you wrote a book on real estate. Can you give us a kind of brief synopsis of what that book is, maybe the title of it, and a little bit about that book?
Sure. It's called Achieving Wealth Through Real Estate. And it's essentially, it's just a description of different ways of getting into real estate, primarily fix and flip, though we do talk about commercial and other avenues there. It's really geared at people who are getting started or maybe have gotten started but looking to improve their game. We do talk a lot about, some legal structures, tax implications, things that are many people may forget to think about for in the beginning, especially, and then they end up at the end of the year with a sizable tax bill. So, so we do try to kind of address the whole circle of investing in real estate.
Right. No, that's super cool, and that's something that you can take, and somebody that's looking to grow and or avoid pitfalls, you can certainly read. And I would think that the lessons that you share in that apply to really any facet of real estate.
That's correct. Yeah, we do. Most of it can be applied anywhere. We do talk about not just residential fix and flip, but other things as well. Yeah.
Right. No, that's super cool. I'd love to dig into the funding side of your fintech lending. When you guys loan, are you guys the direct lenders, or are you assigning those loans to someone else once you close them?
We are a direct lender. We do after we close the loan, we fund it ourselves with our own capital. We may sell loans, we may balance sheet loans, we may do other things. I think we have some pretty innovative things that are kind of taking place right now on the sort of the secondary markets. And this is another reason why I like the fix and flip world, is because I think if we think about, like, for folks that have been in this business long enough, and I haven't been, I learned about it after the fact, but sort of this hard money lenders, right, were around for a long time, not necessarily just in real estate, right? Like, you could go to a lender for various things, but hard money lenders in real estate, from what I understand, really started coming up in sort of the 2000s. Mm-hmm. But now the world is totally different. I think the lending space has gotten institutionalized. There's big private equity funds that play in this world. There's, some banks are even dabbling in this, a little bit as well. So it's a very interesting time.
Right. And so do you guys raise money from other investors in order to fund your loans? Like, do you guys do you run a fund on the back end that people, put money into and just get a fixed return, or how do you guys, like, where does all your, unless you're just, a billionaire, which you might be, I don't know, hopefully you are, but, unless you just have pockets that are, never ending supply of money, how do you guys continue to fund your deals?
Sure. No, that's a great question. And I think, there's probably hardly anyone out there that can continue to fund it themselves for any sustained period of time. Even though someone's got, a net worth of $100 million, it's still kind of, the money goes quickly when in the real estate world, as everyone here probably understands.
Sure.
So yeah, we raised a little bit of money. We don't have a fund set up. We raised some money from ourselves, from the founders. We raised a little bit of outside capital. And that has been sufficient for us to do what we need to do. We're actually in the midst of raising. We're not. Our go-to-market has never been about raising money from individual investors, at least for now. So we're talking to institutions, and we're doing some other innovative things that are sort of going to be made public in the next few days. So for those of you guys that are listening and interested in what we're doing, next week, look out for an announcement on our site, and that has to do with how we're raising money.
Gotcha. Okay. So this podcast will go live probably at the end of December. So,
okay.
Yeah.
So by then, you would have seen. So you could go if you were interested in how we raise money. There's going to be a description. If you go to our the lender is the name of the blog on our website, newsilver.com, and you'll be able to read all about it.
Right. So go to newsilver.com and you can look up and read and see how you guys are going about raising more funds. That's cool. I'll need to put that on my calendar as well, because I will want to see how that comes out. I know you don't want to spill the beans early. So no, that's fantastic. So what does the future look like for your company? And obviously part of that is, sound like a new fundraising method, but where do you want to take New Silver to? What's the ultimate kind of plan for the company
Yeah.
itself?
Yeah, I think we want to be able to grow our originations. Obviously, we are in the business of originating loans, but we want to do it in a smart and conservative way. We want to work with borrowers. I mean, we're not opposed to working with people who are just starting out. So I don't want to say we just want to work with experienced borrowers, because I do believe that everyone at some point had no experience, right? So I think everyone deserves a chance. We do have programs for borrowers with zero experience, and we've got obviously programs for people with experience. We're also thinking a lot about technology and how else can we help our borrowers, our potential borrowers, or just anyone that wants to get into the space. How can we help them be more successful? So about a month ago, we released a software called Flip Scout, which essentially helps people who want to get in. They don't have to borrow money from us. They can just come to our site, register, and use the software. It's completely free. There's no catch or anything. They can find properties and single family, multifamily, residential type properties, see how much it costs now, see what their potential cost would be for rehab, for financing if they want to finance it, things like that, and how much they could make at the end of the day. And so that's been really successful. We're getting tons of people using it, and people are asking us about it, and people are loving it. So it's a free tool. And most likely next week as well, we're going to add on some features that will allow sort of buy and hold investors that want to buy and then rent out the property against residential properties, multifamily, single family, what have you, to do kind of the same thing. I mean, the calculations are a little bit different because there may not be construction, right? But at the end of the day, we're looking at, and these properties are on-market properties. So we're looking at on-market properties, using intelligence, figuring out how much money has to be put in and what's left at the end of the day. And then if it makes sense, we'll show that property. And then, if whoever is using our tool wants to buy it, then they could go to their own agent. They could go to Zillow or any place that's sort of the middle. We're not, we don't necessarily stand to profit from it in any way. If they do want to borrow money from us as a lender, that's great. But if not, they're free to go wherever they want.
Right. That's interesting. Yes, that's a free tool also on your website. We need to look that up and make sure we mark that in the show notes. That's awesome. Very good. Tell us something else. I'm not even sure necessarily what else to ask you as it pertains to the lending space. I guess maybe tell us. Here's two things I'd love to know. Is one, where do you see things going? And what I mean by that more specifically is, how are you guys protecting your downside risk? Because obviously times are uncertain. So what are some steps you've taken in your business to mitigate any risk you might be incurring?
Yeah, no, that's right. I mean, we've never been the most aggressive, so I think we're not conservative either, but we're sort of middle of the road. I think technology is great for sort of giving us the time savings and maybe helping us filter out the best or the most fitting potential borrowers and potential properties. However, we still, we do have humans behind the whole thing at the end of the day. So we're willing to work with people. And I do believe that somebody who is serious about what they're doing, and really wants to get in the business, continue to be in the business, and is spending their time learning and understanding what the neighborhoods, the markets look like, what the kind of the macroeconomic things that are happening in this very uncertain world, how they may affect their small business. I mean, that's the kind of people we want to work with. And I believe those people, because at the end of the day, we fund the majority of the cost, but all of our borrowers bring equity to the table. We don't do 100% financing. So everybody has skin in the game, and they have desire, and they want to finish the project. I'm 100% sure that everyone we work with is completely serious about what they're doing. So, I think people who are who are thinking about these things are the ones we want to work with, and that's really how we protect our downside. Is we want to work with people who understand that there may be downside and are willing and ready for that to potentially happen.
Right.
And just to add, I mean, nobody could have foreseen COVID, right? I mean, like no model in the world, no underwriter, nobody, right? So, things like that. I mean, if that, and I also don't believe that that's going to happen again for another decade or more, right? So, it's probably going to be completely different. It won't be a pandemic. It'll be who knows what, right? But it's sort of a black swan event that doesn't happen usually. And so I think, we've had, everyone was asking, when are we going to see a market correction, right, in real estate, because it kept going up and up and up and up. Well, it didn't really come now. I think the market behaved quite differently than what many people expected. But I do think we've seen a big event that sort of had an impact across the spectrum of our lives, right?
Right. Yeah. And who knows, of course, hand in hand with that, we never saw we saw a brief downturn or a brief, major market correction, and then it went right back up. And much of that probably was due to the fact that we printed a ton of money. And, so it just went right back in the system and everybody kept buying. So it'll be interesting to see where this goes. Are you guys regional lenders, or do you lend nationwide?
We lend in about 39 states. I mean, we focus on, we lend in a lot of the eastern seaboard states, so Massachusetts down to Florida. We lend some in Texas. We lend some in Illinois, and we've done deals in other states as well. We kind of look at the data and let the data take us to wherever it makes sense. I mean, if the property looks good, if the borrower it looks good, then we're not opposed to making a loan anywhere where we're legally able to.
Right. When it comes to minimum loan size, do you guys have anything you say, hey, we won't do anything under this?
$100,000 is the minimum.
Right. Yeah. That makes sense. I'm sure the not only is the juice not worth the squeeze, under 100, it also, becomes that much harder of a property to deal with. Were you ever to take it back and get rid of it and things like that?
So, yeah. Economics make more sense there. Yeah.
Right. And on the maximum?
Maximum is $3 million.
Okay.
Yeah, for residential, I think we could go a little bit more for multifamily. I believe it's $5 million. But yeah, it's typically, I think the biggest. We don't really focus on large loans. We have partnerships if someone comes to us, but our biggest loan is probably in the $2 million range.
Gotcha. That's awesome, Kirill. Thanks for coming on today. Certainly appreciate it. Let's jump into the final four. It is the first question is, if you were to distill everything you know about real estate and you had to distill everything you know about real estate down to one piece of advice, and we're giving it to an aspiring investor, what would that one piece of advice be?
It would be to study data, just to look at, let's say you've picked a neighborhood or a city, a town, whatever. I'd say study the data and what makes up what the real estate picture looks like. I mean, because numbers don't lie. I mean, that's, if you understand where things have been and where they may go, then you have a much higher chance of success.
Do you feel like in your book, and I've not read it, I would like to, but do you feel like you give people a way to break that data down?
I think we do. Yeah. I mean, we look at everything that we consider important in the book. You'll be able to read about what kind of data to look at and what is important. I mean, as I said earlier, there's a ton of data. I mean, every real estate transaction is public, right? So, right. Neighborhood data, census data, but really there's only a few pieces of information, whether if you're a sort of fix and flip investor or if you're a buy and hold investor, data will look slightly different, right? But it's you maybe focus on 5 data points and you'll be successful.
Right. Yeah, and finding those and having the ability to interpret them properly is key. I think a lot of times we can look at data, especially for those of us who get cross-eyed, looking at stuff like that pretty easily. It gets overwhelming. So painting that picture of what does this data tell me.
For sure.
That's an important skill set to master. Second question is, what's one way that you stay on top of your game?
I mean, I read a lot of news and I try to be involved in the market. I mean, we at least used to go to conferences. I think the in-person interaction is I definitely miss that. Obviously we don't have that today, but that's one way I stayed on top of things. I mean, I read a lot of real estate news, and whether it's local or global, right? I think kind of knowing where things stand, because the world is so intertwined now that you may think something happening in I don't know, in Europe or in Canada doesn't really affect us, but I think it does. I mean, eventually it all trickles down to most other places, right?
Right. Absolutely. When it comes to giving back, what's one way you're making the world a better place?
I mentor people a lot, so I've been involved in various business organizations, and I've done my fair share, and I continue to try to be available for folks. I have people emailing me randomly sometimes, and I try to get back to people. So I try to give back that way. Try to share what I know.
Right. No, that's awesome. You have random guys emailing you, me, asking you to be a guest on a podcast. So that's awesome. Kirill, if we wanted to get in touch with you, what is the best way to do that?
You can check us website, newsilver.com, my personal website, KirillBensonoff.com. You can email me at Kirill, Kirill, at newsilver.com.
Awesome. Hey, thank you for coming on today. Certainly appreciate it. Enjoy the interview, and look forward to doing it again sometime soon.
Myself as well. Thank you, Sam.
Thank you.